right, so that's about the top headlines that we are tracking from the world of commodities. But one space that has remained in focus, that is precious metals. And after a powerful multi-year rally, precious metals are no longer in an euphoric phase, but that's exactly what makes the current setup very interesting. Now, gold's recent consolidation reflects a healthy time and price correction as well, not structural weakness instead. But with real interest rates stabilizing, central bank diversification and continuing in geopolitical uncertainty remaining elevated, gold really appears to be building a launch pad rather than just topping out. Ashesha caught up with several experts to understand the road ahead for the precious metal. Let's listen in to an excerpt of that conversation.
I think what we've seen in 25 has been extraordinary, and you can't argue with the numbers. Spells it out very, very clearly. Up, double for silver. If you would have told me that this time last year, I think many analysts would have laughed. And gold up over 60%, copper approaching 12,000 a metric ton. It's just been an extraordinary year from industrial all the way through to precious. And it's a very different year. You've got a US administration, central bank buying, the appetite on I think the retail sector has just been absolutely, all guns blazing. Regardless of where you are in the world, people are buying it, from Costco to lining up for street in the centre of the city in Sydney and going to bullion dealers and buying physical gold and silver. People are storing it because they're seeing that it's a market they want to be participating in. And what we've seen in 25 has just been, showtime. And I think 26 is going to continue that to the upside. And I'm expecting 26 to be a very exciting year.
Exciting here. But Peter, if you can take us through what your target price will be, both for gold and for silver for the next calendar year.
I think I've got to keep 5,000 on the scope of things. 5,000 US has got to be the first line of defense. I want to see conviction to get to 5,000. We've certainly toyed with 4,400, down 38, 3,900, and then bounced back, and it's at 43.50, 43.60 as we speak. I want to see, Ashesha, really solid growth in that first quarter. If we're at 5,000, I'll review that when we get there. But I think the first line of defense has got to be 5,000. For silver, I'm thinking it's got to be 75, possibly 80. And I think both of those are achievable by probably Easter to the middle of the second quarter. So that's what I'm thinking. And I really don't want to go out on a limb any much further than that, because I think I'm going to be astounded by this time next year.
75 for silver. That's the target price coming in from Peter. Mr. Banerjee, coming to you then, what will your assessment be of where the precious metals market be headed? And if your view is positive, what factor in your opinion will aid this up move?
Thank you for having me. Yes, the overall outlook continues to be bullish, because see, when we look at gold, I'll first take gold and then move to silver. Gold, we can break the demand into three kinds or three pillars. First, the consumption demand, basically the consumption through jewelry. Now that demand is price sensitive, so when prices rise significantly, that demand tends to be muted. But what's been driving the gold over the past few years is the diversification demand, which is the demand from central banks to diversify away from their extreme concentration in the dollar, and also of institutions to diversify away from the financial risk. Now that demand will continue to rise because we are going through an advanced stage of de-dollarization. And that's the reason why the central banks are accumulating gold by selling their fiat currency holdings. So that trend should continue. And institutions who are, especially in the West, who are largely underinvested into gold, we see that allocation rise. Now, the third pillar is speculative. They tend to get excited, overexcited, and then the overall position flattens. And that's what we are seeing right now in gold. There is strong speculative demand in silver, but in gold that is missing, because gold is going through a time and price correction. So this is a good thing for the long term, the next 12 months. And we expect that from this launch pad, the gold prices to rise. Because if I look at the US economic, the economic backdrop, it looks like a K-shaped economy where the consumer is sinking and sinking hard. It is the AI and data center theme and the investments around that that's holding up the stock market and the GDP. Now, Trump is facing an election risk next November, and he very well knows that he has to spend a lot in the economy, and that has to be backstopped by the Federal Reserve, which means, in spite of the high inflation in America on the ground, Fed has to ignore that. They have already announced a backdoor QE of 40 billion a month. I think we could see the Fed cut rates aggressively and also look at somewhat a kind of a yield curve control kind of a mechanism, which means the dollar debasement rate is going to increase, which is very positive for gold and, of course, for silver. Gold can scale levels of $5,200 and can go higher than that, because the currency debasement rate, in my opinion, can actually increase a lot. And second, coming to silver, it has a compelling case of the industrial story, and from sectors which are seeing rising demand, the electronics, the electrical, and the whole solar industry. And every major economy is holding silver, declaring it as a critical mineral. We are seeing a sort of a fight evolve between the Asia and the West. Asia is buying silver, taking the delivery through either through ETFs or through other means, and West is trying to compensate that by doing derivative shorts, but that's creating a typical squeeze in the market. So silver can overshoot. Our overall target is around $80. We won't be surprised if it goes to even $85 or $90 in 2026. So both these metals look like an exciting story in 26 as well.
Bull run in precious metals is likely to continue next year, and $90 per ounce is the target that Anindya is now giving us. But Mr. Kedia, let me get you on board. And since you represent the Goldsmith Federation, now with silver crossing 2 lakh rupees per kg in the domestic market, gold has also surpassed that 1,20,000-25,000 rupees per 10 gram. What has been the response of customers to this? Are they buying more as an investment option in anticipation of surge in prices, or are they waiting on the sidelines expecting that the prices will fall in the short term?
Ashisha, in the month of October, we saw that there was a huge surge in demand coming from the customers, and in fact, the premiums they went up by around 15%, which we never saw in the history. And surprisingly, when it from 1,70,000, when silver came back to 1,45,000, 1,50,000, all the demand got evaporated. And what we have seen in last 1 month, in fact, the demand has not been a very encouraging for us. If we just subside the managed demand, which is coming right now for gold, the investment demand is not coming. The people are not coming and buying the gold. And that's the reason we are seeing that the silver is at the discount of around 5,000 to 6,000 from the import prices in India. And gold also twice or thrice in a week it is sold in a discount only. So we are just waiting that maybe when it crosses 2,25,000 or 2,30,000, maybe in anticipation of 3 lakh people will come and buy the silver, or maybe the gold if it crosses 1,40,000, then in anticipation of 1,65,000 people will come and buy the gold. But as of the current situation, people are refraining from it and they are not buying it, and also they are not coming and selling, or they are locking their gains which they have bought around 1 lakh or 1,25,000. People they are just holding the silver which they bought in the first 3 quarters of the year. Ashisha.
For demand to recover in the near term, in the next 1 to 2 months, since you're telling us that demand has been tepid after October, when do you expect a revival in demand?
Ashisha, we have been talking to many of the customers, those who were earlier a very prominent investor, those who were very encouraged about gold and silver. What they are now in a mode of wait and watch. Means everybody is saying let 12-15% correction come and then we'll go and enter and we'll then buy. So I think if that correction comes, then we'll see some buy coming in the gold or silver. Else we have to wait for some Akshaya Tritiya or something, some event like that for a demand to pick up. Else we are not seeing a demand nowadays.
Okay, so You're not expecting demand to recover, at least in the very short term. But Mr. Kedia, if you can tell us, how has wedding season demand been? I understand that investment demand is on the lower side, but when it comes to consumption, is that at par versus what we had seen same time last year?
If I talk about the value terms, it has increased because the gold prices have increased, but not in the volume terms. Average buying per wedding is approx 24, 25 gram this season, and total value approximately there were around 45 days of wedding, so it's 49 days.
All right, so that's all about the gold demand as far as the wedding season is concerned. But if you look at the price trajectory, that's expected to continue to rise. That's the word coming from the experts, and that's the outlook for 2026. But time now to take a look back at